right, let's get right into it. Today, we're taking a deep look at what might just be one of the most important pre-IPO opportunities of this decade: vast data. You see, in the massive gold rush that is artificial intelligence, Vast has quietly built the picks and shovels, the absolute essential infrastructure, by solving the single biggest problem holding the entire industry back. This is an investment thesis on the company that's poised to become the operating system for the AI revolution.
Okay, so here is how we're going to break this down. First, we'll talk about the core problem Vast solves, what we're calling the AI data bottleneck. Then, we'll get into their groundbreaking technology, their total market dominance, their incredible business model, and finally, we'll wrap it all up with a specific pre-IPO opportunity that's on the table right now. So, first things first, let's set the stage. The AI revolution is absolutely happening. But under all that excitement, there's a fundamental crisis with the infrastructure that's threatening to grind the whole thing to a halt.
Think of AI models as these giant, perpetually hungry engines. They need a constant, massive stream of data fed to them at unbelievable speeds. The problem? Well, the data infrastructure we've built over the past 20 years just wasn't designed for this. It creates a massive choke point. So what does that mean? It means those super expensive GPUs that companies are spending billions on are just sitting there, idle, waiting for data. It's a colossal waste of money and power.
And this right here really shows the conflict. On one side, you've got the old way of doing things, these complex, tiered systems that are just slow and clunky. And on the other side, you've got what AI needs: insane speed, massive scale, and simplicity. This massive gap between the old and the new, that's a multi-billion-dollar opportunity. And it's an inefficiency that Vast was built from the ground up to completely erase.
So how do you fix a bottleneck this big? Well, Vast's approach wasn't just to make the old system a little bit better. They threw out the old rulebook and designed something entirely new. The secret sauce for Vast is their DACE architecture. For decades, the entire industry had this trade-off. You could have speed or you could have affordable scale. You could never, ever have both in one system. DACE just eliminates that compromise. It creates a single, unified, all-flash system that's both ridiculously fast and cheap enough to handle the monster datasets that AI depends on.
And this quote just nails it. They aren't just selling another piece of hardware. They are providing the fundamental refinery, the pipelines, the entire infrastructure that lets the whole AI ecosystem, from training models to running them, operate at full blast.
Now, a breakthrough technology is one thing, but for us, as investors, market validation is everything. So let's look at the evidence, because it's pretty overwhelming that Vast isn't just a leader. It's basically created a monopoly in a category of one. You know, there is no bigger stamp of approval in the AI world than a strategic alliance with NVIDIA. They saw what was coming way back in 2021 and became a key investor. This isn't just a partnership, it's a strategic necessity. NVIDIA's dominance depends on its GPUs running at full speed, and they know Vast is the key to making that happen. Their investment is probably the single most powerful validation you could ask for. And the proof that they are the gold standard? It's right here. It's overwhelming. Every single major AI cloud provider, from the giants like Google and Microsoft to the crucial GPU clouds like CoreWeave and Lambda, they've all independently come to the same conclusion. Vast is the essential data platform for their AI stack. When all the smartest tech companies in the world make the same choice, you're not just a leader anymore. You're the standard. Period.
So this slide really explains why they're winning. Traditional competitors are just stuck selling low-margin hardware that's based on old designs. Vast is a pure software company, and that gives them a huge advantage. Now, to put this in perspective, just look at public companies like Snowflake and Databricks. They trade at really high multiples. Vast is growing multiple times faster than they were at a similar stage, but its current valuation implies a much lower multiple. That suggests a pretty big disconnect that the public markets will likely correct once they IPO.
Okay, so let's shift from the tech to the money. Vast's dominance in the market translates directly into a financial profile that is, to be frank, in a league of its own.
First up, 90% gross margin. This is a direct result of their pure software model. That is not just good, that is elite, world-class stuff. A margin this high gives them incredible operating leverage and a powerful engine to just pour money back into R&D and sales to extend their lead even further. Next, this number is just unbelievable. 188% net revenue retention. For context, a really great software company might hit 120%. This number proves that the platform isn't just sticky, it's mission critical. Customers aren't just staying, they are dramatically increasing how much they spend over time. And this might be the clearest sign of their power.
Vast dictates the terms. They receive 70% of a multi-year deal's value right up front. That is not normal. It gives them this enormous cash flow to fund their hypergrowth without giving up more of the company. It's an absolute dream scenario.
And all of this leads to this chart. Just look at the explosive growth in annual recurring revenue. We're talking about a path to nearly $2 billion. This isn't just growth, it's hypergrowth. It's a company hitting escape velocity, powered by a massive market shift that they are perfectly positioned to capture.
So all of this brings us to the investment opportunity. We've laid out the tech advantage, the market monopoly, and the elite financials. Now let's get into the specifics of the current pre-IPO entry point.
This timeline really illustrates the journey perfectly. You see smart money like Tiger Global getting in on the Series C, and the valuation has climbed steadily with each round. The key here is that each step up reflects proven execution and massive market capture. So yes, today's entry valuation is a step up, but we're paying for a much more de-risked company that has proven it can dominate.
And when we look ahead, we see a really clear path of events that should create value. There's a final pre-IPO round expected in just a few months, which will likely set a new, higher valuation mark. They just hired a CFO from Shopify and Goldman Sachs. That's a clear signal they're getting ready for the public markets. And with $800 million in the bank and positive cash flow, they control their own destiny. They're in an incredible position of strength.
The destination is clear, a planned IPO in 2026 or 2027. Management has been really transparent about this timeline. That gives us a clear window for a potential liquidity event and for the public markets to really validate this company's true value.